Hi everyone, welcome back to the channel. Today we are diving into a strategy that many long-term Bitcoin investors love, but with a twist. You have probably heard of DCA, which is dollar cost averaging, but in this video we are going to explore something a bit more dynamic, the progressive DCA. It's a way to adapt your investment amounts depending on how far Bitcoin is from its all-time high. Let's break it down step by step. What is the DCA? So first, a quick refresher. Dollar cost average is a simple investment strategy where you invest a fixed amount of money at regular intervals, for example, weekly or monthly, regardless of the price. The idea is that you don't try to time the market. Instead, you accumulate over time, buying both highs and lows, which tends to smooth out volatility and reduce emotional decision making. It's a favorite strategy for long-term investors because it's easy, disciplined, and historically effective in volatile markets like Bitcoin. But today, we are not sticking to the classic version. We are going to level it up. Let's introduce the progressive DCA. Instead of always investing the same amount, progressive DCA adjusts how much you invest depending on how far Bitcoin's price from its all-time high. And why? Because when Bitcoin is far below its all-time high, historically those have been some of the best accumulation opportunities. So instead of investing the same amount at all times, we increase our contribution when the price is more attractive. For this example, we will use an all-time high of $126,000. Based on how far the current price is from the level, we will invest different amounts. Let's move to the next slide. The rules of our progressive DCA. Here's the structure we will follow. We start with fixed base amount, which could be a percentage of your salary or simply a number you are comfortable with. Then we add extra amounts depending on the discount from the all-time high. As you can see, if Bitcoin is above 60% of its all-time high, we will be investing only a fixed amount. But if Bitcoin is between 50 or 60% of its all-time high, we will be investing the fixed amount plus $1,000, for instance. So far, so on. Depending where the price is from its all-time high, we will invest a fixed amount or plus an additional amount. You can fix it as you want. This creates a system where you invest more aggressively when Bitcoin is deeply discounted and more conservatively when it's closer to its peak. Now let's make this practical. We'll look at three different fixed amounts: $100, $1,000, and $2,000. For instance, if we go to the $100, we will have a BTC price above $75,600, so far so on, depending where we are on the price zone. And this will be the monthly investment amount we will look for. So if you want to work more aggressively or your incomes are higher, you could go to the $1,000 and you will be adapting the strategy to the fixed amount you want. $2,000, whatever you want. Then these tables at the end of the day show how the strategy scales depending on your base amount. And the key idea here is that you are not guessing tops or bottoms. You are simply reacting to predefined price zones with a structured plan. This removes emotions, adds disciplines, and increases your exposure when the market is offering better long-term value. Last but not least,